You're listening to an episode of the Abigail Pugh podcast with, you guessed it, Abigail Pugh. I'm an introverted mama who took my online business from 0 to 7 figures in 15 months selling my own digital products on social media. And guess what? I did it all with my 3-year-old daughter no less than 3 feet away from me at all times. Now I'm bringing you everything I've learned about building a wildly profitable online business that supports your life while allowing you to truly live it. Get ready for raw, honest conversations with entrepreneurs making thousands per month selling their own digital products and people just like you who ditch self-doubt to create the life they've always wanted. If you're ready to make more money, have more impact, and still have time for the things that matter most, you're in the right place. Grab your sneakers, head out on your hot girl walk, and let's dive in. Today's guest is someone that I've followed for over a year now, and I know this kind of talk isn't always sexy or fun, but it's something that we as online business owners absolutely need to talk about. Megan is a money and financial educator, and she helps content creators and online business owners handle taxes and managing their money. I know, super fun stuff, you guys, but Megan is amazing. And I was just telling her a few minutes ago that I feel like there's not a lot of women in the space educating on this stuff. And so I love her and her content and just feel like it's so easy to understand all of this from her. So Megan, welcome to the show. I'm so excited to have you.
I'm so excited to be here. It's not the funnest topic to hear about, but I promise I'll try to make it fun and engaging for everyone listening.
Yes. Now, before we start, we're just going to start off with a little disclaimer for you guys that this is, not tax advice. Megan's actually going to say the disclaimer. She's the expert here, not me.
Yeah, this don't take anything I say here as like tax advice. It would be best if there is something that you have specific questions about to talk to your own CPA or tax person about. And this is just for educational purposes only.
Awesome. Okay, so before we dive in, I asked my audience if they had questions about taxes and all that fun stuff. And I got several questions. But before we dive in, I'd love to hear kind of how you got into this field. I feel like this is like such a specific field and you really have to like love numbers, which like I love making money and I love those type of numbers. But the tax and like the making your money last and making it go longer part, like my brain, that's really hard for me. So I'd love to kind of hear how you got into all of this.
Yeah, of course. So back in 2006, I was working for a local accounting firm and got my CPA license in 2008 and, it was like the crazy tax season hours and working with people in all different kind of areas and different types of businesses. And then in 2015, I had my daughter and decided that I did not want to go back to those crazy tax season hours. It was just not sustainable with a family. So I started my business. I had some clients follow me from my old firm, and the tax piece was great and it was easy, but I found myself really educating a lot of my clients on not just filing the taxes, which is important, but also here's how to plan ahead. Here's how to, manage your money so that you're saving for taxes. Here are the things that you consider. So it really went from very transactional to like prepping tax returns to really educating clients and helping them feel really empowered by their money. And a lot of people would come to me feeling scared and like, oh, I feel like such a failure because I don't know these things. And it's like, well, you were never taught these things. Like you went through college, you were never taught about how to actually run the business side of your business. And so that's what I'm all about, is just really empowering people to understand their finances in a way that is not scary so that they can go and be really successful in their business.
I love that. And it's so true. Like, why did we take e-com in high school instead of learning how to pay your taxes? I'm like, I think it's important to like learn about history and learn what happened in the world. But like, why was I not told how to pay taxes myself? Why was I not told all of these things that would like actually be relevant in life now? So
Right.
I get so bitter about that. I'm like, oh my gosh, like I took history of rock and roll as my elective. And I'm like, why did they not have like how to write a check, how to pay your taxes, how to like change your mailing address, like things that I'm like, nobody taught us these things to do that. So I'm very grateful for people like you.
Yeah.
Okay, I love that. So let's dive into some questions I got. So the first one I got was asking like where to start, right? Like how do I even start with taxes and what to save and what to do. So do you have like kind of like a checklist for someone who is brand new to owning an online business and kind of things that they need to consider before they start making money? Or if they are making a little bit of money now, like what do they need to have set up?
Yeah, absolutely. So a lot of times people will get really wrapped up in like, do I need an LLC or not? And that's super important to figure out kind of from the beginning because it will determine how you're running your business down in the future. So if you start out as like a sole proprietor, you basically just go out and say, I want to start my business. Like that's one path that you can go down. The other path that I feel like a lot more online business owners do is they say, I want an LLC, which is really great because it offers a lot of really cool, tax benefits down the road. And it gives you a lot of flexibility in how you're running your business.
Hmm.
Essentially, they're taxed exactly the same way, but the LLC is really important because you're creating this entire separate legal entity. And so once you do that, you have to get a tax ID from the IRS, the EIN, and that's like the social security number for your business. That's really important to have because the number one thing that I say to new business owners is get a new separate business bank account. It's so important to not commingle your money and not have your personal money going in with your business money. And in order to do that, you have to have a separate business bank account. So if you're going the sole proprietor route, meaning you're not setting up an LLC, you can just set up a separate business bank account. It'll be in your either your business name or your personal name, and you can set it up that way. If you're going the LLC route, you have to do a few things first. You have to get your LLC first with your Secretary of State. Then you have to get the federal tax ID number from the IRS, and then you can get a business bank account. So that's the number one thing. And it seems really simple talking about it, but I have come across a lot of business owners who are like, well, I started this business and then I decided to do my LLC, but I have my bank account over here and all my money's like all over the place. And I'm super stressed about how to clean it up. So if you are in that place, it is easy to clean up. So don't stress about it. But if you're brand new and just starting out, like separating your money is probably the number one thing that can really set you up for not having a mess and stressing about things down the road.
Yes, that was literally one of the first things I did was like make sure everything was always separate because it's easier for your brain too, just like two separate things completely. So another question is, what is the best way to keep track of your tax write-offs and how thorough do you need to be?
Yeah. So keeping track of your tax write-offs. So they're called write-offs, they're called deductions. So you might hear those words used interchangeably. Is keeping, when you keep your money separate, you can keep track of your expenses. You could be as simple as keeping track of it in an Excel worksheet. Just keep track of all of your expenses and then keep track of what types of expenses they are. So are they subscriptions? Is it something that you bought for your office? Are you paying for advertising and marketing? And so you want to kind of keep those categorized that way. And when you have your money separated, it's really easy to go back through your bank account or your credit card and make sure you're capturing all of those expenses. If you want to automate more of that and not want to have to manually put it into an Excel worksheet, then that's where I would recommend doing some sort of accounting software. QuickBooks Online is great. It's a paid subscription that you have to do. Wave apps, Wave Accounting is a free online app that you can, or software that you can use. And a lot of people will get really intimidated by these accounting softwares, but I just want to tell you that you're not learning accounting, you're just learning a new software and you're really just telling your expenses where to go.
Yep.
As far as detailed, you need to just make sure that you're able to support all of your expenses if you ever got audited. And that's the thing. It's like if you ever got audited and the IRS or your state wanted to look at your transactions, you would have to prove that they're business expenses. So it's really easy to look at your Calendly or your Teachable and be like, oh, this is for my software. And you can get into that history of your invoices that you paid online. So that's really easy to do. But if you're buying stuff from Amazon, you could be buying stuff for your bedroom, you could be buying groceries, you could be buying office supplies. So it's really, really important to keep those receipts for those things that you're buying. And that way, if you ever got asked what they were for, you could prove it in an audit. And you can keep those records digitally in a folder in your email. You could keep them on a folder in your computer, but it really is important to keep all those records because if you can't prove to the IRS that you bought paper at Target, they could disallow that, and then you're not keeping track of it. Then you can't deduct that expense.
Yeah. I think I buy everything that I possibly can online for my business because it's just so much easier to have like a folder. And I don't do my own like accounting now and bookkeeping. Somebody else does it, but it's so
Mhm.
easy for her to like know exactly where things go when I do it online because she has access to the receipts. She can see what it is. So if you're doing it yourself, I would say as much as you possibly can purchase things online because it's so much easier to track that. And like I used to, my first business that I owned was I was a floral designer. So I had to keep track of all the receipts from like buying florals in person. And it was like the biggest pain in the butt every year. Like I hated it. It was like one of my least favorite parts. And I had these big folders of receipts and I had to scan them all in. And like back then they didn't have like the fancy scanner things that they have now on phones where you can like just scan a receipt in seconds. And it was
Right.
such a hassle. So now I'm like, if I can't buy it online, I don't want it for my business. It's not even worth it. Just like making it so much easier. But yeah, the Wave app, is that what you said? We will link that for you guys and the QuickBooks one. She said QuickBooks is paid, which QuickBooks is what I use, and my team, my tax and bookkeeping team uses. And then Wave, I've never heard of them, but I love having a free option. So I'll make sure to link both of those in the show notes for you guys. Now, next question. I have an LLC. Should I be claiming my income under and tax that way? So I think she's asking like the separation of that.
So if you have an LLC, and I see this a lot where people will have an LLC and then maybe they're doing contract work on the side. So if you have an LLC and that's your business, on your tax return, you're filing a schedule that is kind of like a summary of your LLC activity. So all of your income should funnel into the LLC's name and into the LLC's bank account. So if you're working
Yep.
with someone and they ask you for a W-9, or what's your tax information, you should give them your LLC's name and your LLC's tax ID number. That money comes into your business bank account, and then you report that income on your tax return under the LLC. At the end of the day, the way that I like to think about how your business works and how taxes work is it's essentially a big funnel, and everything at the end of the day gets taxed at your personal level. So your business, your LLC, won't ever really pay taxes. All of that profit passes through to you personally, and you pay tax on it at your personal level. So if you have an LLC and you're doing, you have your business, have all of that money come into your LLC bank account, all of that gets reported on your tax return under your LLC schedule. If you are kind of doing multiple things where you have an LLC and maybe you have a side gig and you're doing something similar, maybe you're a copywriter and you have your own copywriting business and you are also doing some contract work for someone else, have them also send that money to your LLC. We want to try to capture it all into that LLC
True.
bucket rather than having an LLC and then multiple side gigs if
Yeah.
they're related. Yeah. Does
Yeah.
that answer that question?
No, yeah, absolutely. Okay, what business expenses are not deductible that we think are deductible? And specifically, like I would say, like the content creation ones. I think that's what there's so many TikTok videos where people are like, you can write this off. And I'm like, no, you cannot. Like, what? So, can you give us some examples for things that most people probably think, oh, yeah, I could totally write this off as a content creator or an online business owner that actually they can't?
Yes. I'm going to start with clothing. That's probably the number one that I get to is I am doing a photo shoot or I'm wearing these clothes in my content. Can I write that off? And the IRS is so strict about clothing that unless it's like a required uniform or it has logo and branding on it, you can't write it off. One thing that I have clients do that's a great tip is if you're doing a photo shoot or something like that, instead of buying new clothes, maybe check out Rent the Runway. That's a
Yep.
great way to, get that deduction for clothes that you might not wear ever again. And then you're just renting the clothing. Now it becomes a deduction. So clothing is a big one. Personal upkeep, like hair appointments, nail appointments, that kind of stuff. So yes, maybe you're on camera and you're doing a lot of content creation and you need to look a certain way, but that doesn't mean that those expenses then become deductible. If you're going to do a photo shoot and you go get your hair professionally done for that photo shoot, then yes, that could be a deduction. But if you just go get your hair highlighted every, 4 weeks, 6 weeks or whatever, and you get your nails done, then that just general maintenance is not a deduction.
How would they prove that? So if someone was like, okay, I have a photo shoot, would you save like the receipts for the photo shoot and kind of like clump all that together so that if you did get audited, you could say, hey, here's the proof behind it?
Yeah. So the IRS looks at a lot of things. They would say, okay, you have this receipt for your hair appointment. Then you'd be like, yes, well, my calendar also shows that I have a photo shoot this day and your hair appointment was at 10 and your photo shoot was at 1. You have the invoice and the contract for the photo shoot. So you could tie all of those together based on not just the receipts, but also what your calendar says. So keep your calendar really up to date, especially if you're traveling to go do content creation or anything like that. Like you're driving somewhere to go do a photo shoot, those miles can be deductible. Or if you're like renting an Uber to go somewhere for a photo shoot, that can be deductible. But you also need to support it. You could support it with your calendar. So make sure your calendar is really up to date with like where you're going, what you're doing, what the purpose of the trip is. Travel is a really big one to where I've seen people be like, well, if you go on vacation and you're creating content while you're on vacation, you can write the whole trip off. And it's like, well, I think that would probably not stand up. But if you're, if you have to go to a different location, whether in state or out of state, to do content creation because you're required to through one of your contracts, with a brand partnership that you have or something like that, then that can open up that deduction. But you also have to keep really, really good records of this is when I went, this is when the periods I was there. And if you're vacationing 4 days and working on content 1 day, that's not going to make your trip entirely deductible. So you just have really diligent records.
Is there like a percentage that has to be work for you to write off the whole thing if you were like traveling?
When you're going internationally, there's a percentage. It's like if more than 25% of your trip, I'm pretty sure, like off the top of my head, if you're traveling more than like 25% is personal or more, then you can't write anything off. If you're structuring your trip to where maybe you have a business meeting on Friday and you have a business meeting on Monday and then you're there over the weekend, then that can turn that entire trip into a business trip because it wouldn't be reasonable for you to fly somewhere Friday, fly home, and then Monday and fly back.
So it's all about the strategy.
All about the strategy, but it's all, and so like when you're traveling, keep itineraries, keep email receipts, like that type of stuff. Gym memberships is another one that I have seen, like I'm at the gym and I'm creating content and I'm sharing that in my stories or I'm using that as a background in my reels. Like just because you're doing that doesn't make it deductible. Like, gym membership is really kind of personal, or if like you're sitting all day, so you have to go to the chiropractor, that doesn't make it deductible.
Yeah.
If you're a personal trainer and your business is that, then that could make it deductible. So it really does depend on your business, but a lot of those general things are not deductible.
Okay, so what about, this one's like so specific, but what about if someone is like, how you can like review Amazon products and post testimonials and then like you earn a commission from that? Can that be a write-off, ordering things to create a video around it and post it to get commissions? Is that product considered a write-off?
That potentially could. And that's something that I would talk to your CPA about on a case-by-case basis. I mean, if it's a significant part of your income, then it might be more reasonable to take that as a deduction. If my business is a CPA and I make a lot of my money doing taxes and, coaching in my online course, and then I'm getting, $100 or $200 a year in affiliate from that, you know what I mean? It really does depend on your business.
Okay, someone else asked about tax write-offs specific to buying a business vehicle. So they want to buy a business vehicle. What is the best way to kind of go about that and like get the most write-offs for it, I guess?
Yep. And that was another one I was going to talk about. So I'm glad, that's perfect timing. There's 2 different ways that you can write off your business vehicle. Once you pick a method, you have to stick with it on that car. So one way is the mileage method. And you basically will keep track of all of the business miles that you drive, and you can take a cents per mile on your business miles for the year. So like if it was 65.5 cents a mile and you drove 10,000 miles for the year and they were all business miles, then you get a deduction for $6,500. That cents per mile component includes like wear and tear. So it includes like a component for fuel, depreciation, the cost of the car, insurance, stuff like that. The other way to do it is to purchase the car and want to take like an actual cost. So you buy a new vehicle and you're saying, I want to write the whole car off. And I've seen that a lot where it's like, if you buy a vehicle and you put it in your LLC's name, you can write 100% of it off. And it's like, well, if you're not driving it 100% for business, you can't write 100% of it off.
Yep.
And so you still, in either way, you have to keep track of your total miles that you drive, and you have to keep track of your business miles. And the reason is the percentage of business use. Like if you drove 10,000 miles and 6,500 were business miles, you'd get to write off 65% of your car. You'd get to write off 65% of your gas, 65% of your insurance, your tires, 65% of the cost of the car. So that's the actual method. And so you could do it one of two ways. And I've seen a lot on the TikTok videos and the Instagram people saying buy a car, write the whole thing off. And it's well, if the IRS came and said, well, you didn't drive it 100% of the time, you can't write 100% of it off.
Can you use the mileage one if it's not your work car? So let's say your business doesn't own your car, but you use it for business. That's where you would use the mileage one, right?
You would use the mileage one in that way. Or if you have an LLC and you're taxed as a sole proprietor, you can still do it either way, because it doesn't have to be in the LLC's name. If you're an LLC and you're taxed as an S corporation, which if you're just getting started, you're not going to be that way.
Yeah.
It is a lot more complex to where you have to do things with your W-2. And you definitely want to talk to your tax person on that, because it probably should be in the LLC or in the LLC's name at that point. But you don't have to do mileage if your vehicle isn't in the LLC name. You still have the option to do it both ways if you're only filing one tax return.
Gotcha. And basically, check with your CPA.
Check with your CPA and keep track of your miles. And you might not think that it's significant, but they definitely do add up. If you're driving to go, shoot content, you're driving to go pick up supplies, maybe you need some props for a photo shoot and you're driving a lot. If you have the QuickBooks Online app, it keeps track of it for you. There's an app called Mile IQ that a lot of my clients use, and you can just mark it business or personal. And that way you're not having to manually track it. And then make sure to keep your calendar up to date too, so you can, just support those mileage.
Yeah. I used to use Mile IQ when I was, again, in the floral design world, because I used my car so much. And it was so nice because every time you get in the car, it asks you was this a business trip or not? And just keep the notifications on for sure, because it pops up. It can tell when you're driving, and it'll tell you, it'll ask you, was that a personal or business trip? And then it gives you a spot to log what it was. Yeah. And I found that doing that in the moment, a lot of people are oh, I'll just catch up. I'm no, you won't. You'll forget. So doing that in the moment if you are driving a lot for work.
And that applies to multiple vehicles. So if you have your car that you're mainly driving, and maybe you and your partner take a trip and you're using that car, you can take miles on multiple cars, which actually can help too.
Yeah, that's awesome. Okay, so I know this question is going to be probably different for most people depending on where they are located, but on average, what would you say is a good percentage to set aside for taxes each month?
Yes, so you said it right. This is going to be so different for every person. I have clients I work with who are doing 10% of their revenues, and I have clients that I work with who are doing 30%. So it really depends on where you're located, what state you're in, because some states have higher income taxes, some states have none. And then it kind of depends also on your business and where you're at. If you have high income and not a lot of expenses, you're going to need to set a higher percentage aside. If you're just getting started and you have income, but you have a lot of expenses because you're investing in professional development and stuff like that, and you don't have a ton of profit, you'll have less set aside. And it really is just kind of a guessing game to a point. But I would suggest as a brand new business owner, just to cover it and make sure that you're golden, I would probably say between 20 to 25% would probably set you up to where you're in a good percentage of everything that you make. You're setting that aside for taxes and you'll have enough. And even if you don't have enough, you're not going to have to make up that much.
Yep.
And then if you file your taxes and you didn't have enough money and maybe you set 20% aside, that's a great time to be okay, well, maybe I need to readjust and next time I'll do 25%. So it's just going to depend.
It's always better to have more, you guys. I did 30% from in my early days from the beginning. It looks a little different for me now, but I always wanted more than not enough, because there's nothing worse than getting to a quarterly tax payment and being short. I would always much rather have extra saved that I can either put back into the business or roll over to the next payment. It's always better to have more than not enough. And like she said, if you go into it and maybe you have too much one time or not enough, then just adjust how much you are saving. But I literally do this the second something comes into my bank account, the taxes get put aside, because it's so easy to spend it on things that, yes, I'm sure your business needs it, or yes, the development or what you're buying. If you're buying a course that's like really important, or you're hiring someone, it's important. Yes. But at the end of the day, like, you have to do it first thing, because your brain will be like, oh, well, I'll just make it up next month. And then it becomes this like spiral of like, oh, I'm always making it up. And it's just not a good place to be in. So I
No.
always have it come out like basically automatically out of every time I like get a payout into my account, because it's just so much easier for my brain to know that it is there. Mine actually goes into a high yield savings now, but talk to me about quarterly taxes, right? Like, who has to pay those? Why are they important? When should they be worrying about that? And yeah.
Quarterly taxes are basically the IRS's way, and your state also might have quarterly tax requirements. They want their money equally throughout the year instead of just once a year when you file, and it's a way to prepay the taxes that you think you're going to owe. And
Hmm.
this can be really challenging, especially if this is like your first year in business, to be like, what am I even doing here? But basically, if you think you're going to owe $1,000 or more, then you're required to pay quarterly taxes. And if you don't, the IRS can even assess a little underpayment penalty, because they're saying you should have paid us quarterly and you didn't, we're going to assess a penalty. And so you really want to get in the habit of paying those quarterly taxes when you have a business and when you have profit. And those quarterly payments are due April 15th, June 15th, September 15th. And then the fourth quarter payment is actually due January 15th of the following year. So put those in your calendar. Those dates are also in my tax resource guide, so that you remember to make those payments. And if you can make those payments on a quarterly basis, when you go to file your tax return, that's when you actually like pencil the numbers out. Like, did I pay enough in or did I not pay enough in? And
Mhm.
if you paid enough money into the IRS and your state through your quarterly payments, then you can either get a refund of the money. So it's not like the IRS, you send it into the IRS and they keep it forever. You'll get a refund, or you could apply it to the first quarter payment, of the following year.
Hmm.
Or if you didn't pay in enough money, they'll say like, oh, you should have paid, you owe us this much, you only paid us this, then you have a balance due.
Yeah.
Paying quarterlies is so much better than filing your taxes and having your CPA be like, well, you owe $5,000. And then you're like, oh my
Yep.
God, like I quit.
And like, aren't you not penalized if you don't pay enough into them? Like, you could calculate, even if you're wrong, like a little bit off on the quarterly payments, and you end up paying more. Like, they're not good. They don't penalize you for that, right?
Not for paying more. Basically, the IRS will look at your last year's tax return and say, okay, you can either pay in 100% of last year's tax or 90% of the current year's tax. They have this like complex formula. I
Gotcha.
basically just, you could look at, if your business is really consistent and your profit is really consistent and your taxes are about the same every year, it's really easy to just be like, what did I owe last year? I'm going to divide it by
Yeah.
4. But starting out, it's a lot, you have higher revenue months, you have lower revenue months.
Hmm.
So I just like to look at it on a quarterly basis. What was my, income minus my expenses? What's my profit? And then of that profit, how much am I going to send into the IRS? And I usually can recommend, maybe around 20% to the IRS, and then whatever your state tax percentage is. And you can
Hmm.
Google, Montana income tax rate and send it in.
Yeah.
Just to get something sent in,
Yeah.
rather than thinking like, I don't know how to do this, I'm not sending anything in.
Yeah. It's better to do it than to not do it. Even if the calculations aren't perfect, like, I think, in my opinion, just sending in what you think you owe is much better than just being like, whatever, I'll just wait till the end of the year. Cause then I feel like you're more likely to get penalized when you don't do any of them, as opposed to like, okay, I didn't pay enough, I'll pay them more.
Yeah.
But yeah, that's kind of how I see that. And honestly, it's easier to pay 4 times a year than it is to pay one chunk. Like,
Yeah.
yeah, it's so much easier to give it to them like gradually, just mentally. Okay, last question. Or maybe there's 2 more. How would you go about hiring your kids in your business?
If you're going to hire your kids in your business, you can definitely do it. And it's a great tax strategy to, one, give them earned income, because once they have earned income, they can contribute to like a Roth IRA and get them investing early. If you're organized as a sole proprietor or an LLC, you can hire them as employees and you don't have to pay Social Security or Medicare tax on their wages, which is great. And but you have to pay them for the work that they're actually doing. You can't just say, I'm going to pay you $13,000 for not working at all, right? Like that they would
Yeah.
the IRS knows about this and they would look at it. So
Yeah.
you would have to treat them just like you're treating any other employee and document the work they're doing. Maybe they're in your Instagram stories. Maybe they're, doing modeling for your business is very, very common. Maybe they're helping you with your business. You might be a doula and your baby is like a clear part of your marketing. You can do that. You have to hire them just like you would hire any other employee. So if you're hiring them as an employee, like a W-2 employee, you can pay them up to like 13, it changes every year. It's like close to $14,000 without having to pay federal income tax on those wages, because the standard deduction, everybody gets this deduction, is like $14,000. And then so that way your kid isn't having to pay income tax on
Gotcha.
that money. They still might have to pay state income tax, but not federal income tax. And then you might not have to pay Social Security and Medicare tax on your business. If you're an LLC taxed as an S corporation, you have to pay Social Security and Medicare tax. You have to pay workers' compensation. Depending on your state rules, you might have to pay that. You'll have to pay unemployment insurance. So you do have to pay some extra taxes. You have to pay unemployment insurance on their wages if you're a sole proprietor or an LLC also. But yeah, you just have to hire them, have them fill out a W-4, have all the forms on hand in case somebody wanted to come and look at it. You could do it that way, or you could hire them as a contractor, where you're just paying them like a 1099 contractor. You get the deduction on your business for that, but then they have to pay Social Security and Medicare tax potentially on that if they're filing on their return. So you might just have, if you did it as like a W-2, you could mark them exempt from Social Security and Medicare tax. But it's a great tax strategy because you get the deduction at your business level. Maybe your kids are having to buy school clothes or having to buy birthday gifts for their friends. You're going to have to give them that money anyway. If they're working in your business, then that's a great tax strategy.
Cool. So what can you give me a few ways that you would think are good ways to include, like legal ways, basically, without this being legal or tax advice, for how a kid would work within a business? I know you named a few, but just a few like examples.
Like when I was a kid, I cleaned my dad's dental office like once a week. I would go in and clean it, after hours. So you could have your kid come in and they could clean your office. If you had papers, they could do shredding. Depending on their age, you could do modeling. And if having your child, being a mom, being a parent is part of your business structure and like how you're connecting with your clients and your kids are showing up in your photo shoots and you're, sharing your family pictures, those things, like you would have to either pay a model to come in and pretend to be your kid, or you could, or you could have your, child do that, depending on your business. If you're reviewing products for your household, this is a non-toxic household. These are some of the things that we do for our family, then you could hire them and you could do stuff like that. But it really is a business by business thing, like everything.
Totally.
But
like everything.
I mean, if you had rental properties and your kids were old enough, they could go clean the rental properties or the Airbnb. They could mow the lawns. You could think of all the things ways that you could put them to work, and then it's like, oh, could I pay them for that? Like, would it make sense to have that be a business expense?
So smart. Okay, I lied. That was not the last question. I saved the best one for last, you guys. So I got a lot of questions on how to handle sales tax for digital products, which I know this is like ever changing, and it's infuriating that it's always changing and that it's different for every state, and it is pretty complex. So how would you advise people on how to handle that?
Sales tax can definitely be confusing, and it doesn't seem, because it's so state by state, it doesn't seem like you get any information anywhere. But basically, I would start by looking at the state that you're physically living in. Like, where are you living? And is there sales tax in your state? And if there is sales tax, what do they tax? Some states will tax digital products and some states won't. And some states will tax digital products only if they're downloadable. So you really have to kind of get into the nitty gritty of, what are you selling and is it subject to sales tax in the state that you're in? And if it is subject to, and if you're really confused, if you're at their website, and you're like, I just can't figure this out, give them a call and ask them, because then you're getting it from them and you're not going down like a Google rabbit hole.
Yeah.
Like, this is what I'm selling. Do I have to do it? So if you are subject to sales tax in your state, then you need to register for a sales tax number and submit reports for sales tax. It could be monthly, it could be quarterly, it could be yearly, depending probably on your activity level. So that's number one. And if you're using, whatever payment collection service you're using, maybe it's collecting sales tax for you. A lot of them will, but then you might be responsible for submitting it. So you as a business aren't paying sales tax. You're basically collecting it from other people,
Yep.
holding on to it, and then you're sending it in. So then the second thing that you could do that you should do is look at where you're selling the most to. And your payment platform, again, might be tracking that. Like I know Stripe or Shopify will show you, where you have the most sales in what states. Like say you're selling a lot of stuff in Utah. So then you would go and look at Utah's Nexus rule. Nexus is the word. If you're trying to Google and do some research, Nexus is the word that you want to do, NEXUS. And basically, Nexus is a way to determine if you have enough presence in that state to have to pay sales tax to that state. And presence in the state is defined on a state-by-state basis, and they have thresholds. So some examples of thresholds could be dollar amount. So it could be like $100,000 in sales. Once you reach that in the state, then you have to do sales tax. And then you have to, again, apply for a sales tax permit and get a sales tax number and then submit that tax. It could be a combination of number of transactions and a dollar amount. So it could be like $100,000 or 200 transactions. I've seen $100,000 and 200 transactions. There are levels out there like 250, 500K, 500,000 and 100 transactions. So it really does depend. So after you determine if you're subject to it in your state, I would go look at where the most of your sales are happening, and determine then if you have Nexus in those states and where you are in that threshold level. And some, like I use Teachable for my online course. Teachable will collect sales tax for me and send it in on my behalf. And that's great. They're just doing it regardless of my threshold levels, like my individual, they're just doing it. So I don't have to worry about it, which is nice. But depending on your payment platform and how your sales are coming through, you might have to do that manually. A couple resources that I use I start out looking at the state's website. So it'd be like Idaho sales tax website. I'd go to their website. Another resource that's really helpful and like breaks it down into like user-friendly language is TaxJar. So I'll go to taxjar.com. That's one that I use a lot to kind of basically get a starting point of like, okay, here's some general thresholds. And then I'll go to that state's website and double check. So hopefully that's helpful. But yeah, sales tax can be a big thing. But the nice thing is the thresholds are in that higher range. Yeah. And then once you do, then you should have some clear steps on what to do next. And it's like, okay, sales tax number, start paying that. How often do I have to pay it, et cetera?
Definitely. And if you guys are like on the lookout for a CPA, I would definitely recommend someone who understands like content creation and digital products, because it is a newer thing. It's not a newer thing, but like a lot of CPAs that just do like regular businesses don't understand all of this, right? And the company that I actually outsource to, they are like for content creators, right? So like they understand all of that. And I just thought that was like so important when I was looking for someone, because I'm like, I don't understand all of this. It is a lot.
Right.
And it's a lot of like, if this, then that. But again, like I don't want these things to hold you up from pursuing digital products, right? So just make sure that you are really, like if you are going to hire out to a CPA, that they know what they're talking about, right? Like ask them, do you know how to handle sales tax for digital products? And if they don't, maybe find somebody else.
And find somebody that you feel really comfortable asking questions to, and that they don't make you feel dumb is there's a horrible word to use. But, you don't want to feel like you're going into the principal's office and being like, oh gosh, I feel so stupid every time I leave my CPA's office. Like if that's how you feel, find somebody new, because you should never feel that way.
No, it's not your expertise. It's theirs. And any good educator or business owner will not make you feel like an idiot for not knowing what you are literally hiring them to do for you or to teach you. So do you offer any? I don't think you offer any one-on-one for that kind of stuff, right?
I do. I have strategy sessions.
Oh, you do?
Yeah. So I have strategy sessions where we could talk about, like, what's your situation? Like I have, hey, I'm just starting my business. How should I organize it? Getting started, or I've been doing this and my finances are a mess. Can you help me clean it up? Like I want to go to, I've been using Excel. I want to go to QuickBooks. Can we get it all in there and teach me how to use it? So I have a lot of those types of one-on-ones where we can literally do anything in an hour.
Awesome.
And then right now I'm not offering tax services, but basically
Gotcha.
anything else like coaching, or if you just want one-off sessions, I can kind of do anything.
Awesome. Well, Megan, thank you so much for coming on today. You guys, I will link her Instagram and her strategy session, and she has a freebie as well that is kind of just the tax setup 101. I forgot what it's called, but I love it. I reference little things from it all the time. It's very helpful. So I will put all of that in the show notes for you. And Megan, thank you so much for coming on today.
Yeah, thank you so much for having me. It was a lot of fun.
Good. See you next week, guys. Thank you so much for hanging out with me and my guests today. If you learned anything from our episode, I would love it if you could share it over on your Instagram stories and tag me at Abigail Pugh. Until next time, love you, mean it.